This video addresses a very specific question, which is, can you apply for a loan modification while you are current on your mortgage? So if you're a subscriber to the page, welcome back. If not, make sure you subscribe, comment, like the videos. This video in particular was taken from somebody's question that they asked, and so it's always great for you guys to ask me questions and comments because I love hearing kind of what content would be most helpful for you guys. So the question I got again was, somebody applied for a loan modification and then they got denied because they were current on their mortgage, and they want to know kind of why that is and kind of what that's about. So the answer to that kind of requires you to understand, what a loan modification is, right? And a loan modification really has two parts to it. The first part is you have to prove financial hardship. So you have to prove to the bank in some way that the reason that you fell behind on your payments was due to something unavoidable. There are a ton of videos on this page about what qualifies as a financial hardship. Watch those videos if you have more questions about that. The second part of a loan modification review is you are showing the bank that your finances have recovered in a way where you can kind of resume making mortgage payments. So loan modifications are truly typically for people who are in default, and then they need to resume making their regular payments, but they don't have enough money to pay all of the arrears. If you're somebody who's just current and paying on your mortgage and you want a lower interest rate or you want new terms of a loan, you're probably looking to do a refinance. A refinance is different from a loan modification, and there is another video that just goes into quickly what the difference is between a refinance and a loan modification. But the reason that somebody would be denied for a loan modification if they're current is because they don't have any demonstrable financial hardship as far as the bank can see. So you might be somebody who's making your mortgage payments every month. You might be experiencing financial hardship, meaning things are not going well, but the bank doesn't know that you are having any sort of financial hardship because you make your mortgage payments every month. So it is very difficult, if not impossible, to get approved for a loan modification while you're current on your mortgage, because it will be very hard for you to meet that financial hardship criteria. For somebody who has defaulted on the mortgage, who has stopped paying, it's clear. The bank understands that you cannot make your mortgage payment because you cannot make your mortgage payment. And so if you're somebody who's current and you're looking to just kind of restructure your loan and get better terms, you likely need to talk to a new lender and go through a refinance. If you're somebody who has stopped paying because of a financial hardship and then you want to resume paying, a loan modification is more the right move for you. Now, there is one very kind of minor situation where you could be current and still apply for a loan modification and still get approved, and that is called imminent default, meaning if you can prove to your bank that you're about to undergo a massive financial hardship, you might be able to be approved for a loan modification. A good example of this would be if somebody has been told that they're going to be laid off in 2 months. They know in 2 months that the household income is going to go down. They can tell the bank, hey, I'm about to have an imminent hardship. I'm about to have a hardship coming up. It hasn't come up yet, and you will have to supply proof of it. What I will say though is, oftentimes, a loan modification for somebody that's current, it's likely not going to drop the terms of your modification enough to provide you whatever relief you're looking for. A loan modification truly is a way for somebody who has stopped paying to start paying close to the original amount that they were paying and just resume making those payments. So a loan modification is a good option for somebody who has not been able to pay for a little bit of time due to financial hardship. Their financial hardship has recovered, and then they're able to just resume making the payments. If you're truly somebody who's just looking for better terms on your mortgage, you should start talking to mortgage loan originators or new lenders or people who complete refinances for people who are current. If you're somebody who's in default, you likely cannot refinance your mortgage until you are back current and making current payments, and then you would need a loan modification. So if you're watching this video and what I'm saying is interesting to you and you have like a little bit more thoughts about this refinance versus loan modification question, watch the video that's titled, "What is the difference between a loan modification and a refinance?" So the general answer is, it is very hard, if not impossible, to get approved for a loan modification while you're current because you won't be able to demonstrate financial hardship for the bank, and banks try to reserve loan modification approvals for people who have been behind and been in default. If you can pay your mortgage, you should pay your mortgage. If you truly are having trouble making your payments every month and you do default, a loan modification would probably be a good option for you if your finances recover and you then are able to pay it. Hope this helps.